Let's talk about something happening right now, quietly, without headlines, that is making it significantly harder for millions of Americans to own a home. Veterans, single women, LGBTQ+ buyers, minority families, immigrant buyers, first-generation households trying to build something from nothing. I'm talking about a coordinated rollback of federal housing protections, and most people won't find out about it until after it's already cost them. I'm Troy Patterson. I work specifically with buyers this system has historically underserved. And what I'm seeing at the federal level right now should concern every person watching this video. Let's go through it, all of it. Freddie Mac and Fannie Mae eliminated a specific goal to serve minority neighborhoods. These two entities back the majority of mortgages in this country. For years, they had a dedicated separate goal specifically targeting minority census tracts, making sure mortgage credit was actually flowing into minority communities that had historically been starved of. That goal is gone. As of 2026, it's been folded into one general low-income areas category. Here's what that means practically. A wealthier buyer who's buying in a qualifying zip code now satisfies that goal just as easily as the first-generation buyer it was designed to help. The communities that needed protected priority in how mortgage money gets directed, they've lost it. Most people have no idea it happened. The Federal Appraisal Bias Task Force has been disbanded. In 2021, the federal government created an interagency task force to address one specific problem: homes in minority neighborhoods consistently appraising lower than comparable homes in white neighborhoods. Not because of condition or location, but because of bias. One high-profile case made national news, and a home appraised at $472,000 jumped to $750,000 after the black homeowner made one change: removing all evidence that a black family lived there and having a white friend stand in during the inspection. Same house, same neighborhood, $278,000 difference. Hear that again, $278,000. That task force was disbanded in July 2025. Called it government overreach. Individual agencies can still pursue individual cases, but the coordinated federal effort to address appraisal bias as a system, eliminated. Black homeowners continue losing equity, quietly, legally, and largely without recourse. Disparate impact protections are being stripped away, and this affects everyone. This is buried in regulatory language, but it may be the single most dangerous change on this list. Right now, a lender or insurer can be held liable under the Fair Housing Act if their policies produce racially unequal outcomes, even without proving discriminatory intent. That standard is called disparate impact liability. It's the legal tool that call it redlining. It's what held banks accountable for steering minority buyers into subprime loans during the 2008 crisis. HUD proposed eliminating it entirely in January 2026. The CFPB finalized a parallel rule change in April 2026 that removes it from the Equal Credit Opportunity Act as well. If you experience discrimination, you now have to prove a lender intentionally targeted you. That's nearly impossible, which means lending practices that structurally exclude entire communities became legally untouchable. This doesn't just affect minority buyers. It removes the legal floor for everyone. Immigrant buyers have been cut off from FHA loans. FHA is an entry-level mortgage program this country built for people who don't have 20% to put down. It's how millions of working families, including Black immigrant families from the Caribbean, Africa, and Latin America, access homeownership. In March 2025, HUD announced that all FHA loans now require U.S. citizenship or permanent residency. If you've been in this country for years, paying taxes, building credit, raising your family, but you don't have that specific documentation, you're out. The ITIN loans, which allowed borrowers with individual taxpayer identification numbers to purchase homes, are under increasing pressure as well. These aren't loopholes. They were legitimate financial products for people contributing to this economy and building toward homeownership the right way. LGBTQ+ buyers are losing federal protections in real time. Since 2012, HUD's equal access rule required federally funded housing programs to be open to everyone, regardless of sexual orientation or gender identity. That protection is now being dismantled. HUD has proposed revisions to nearly 50 housing regulations, removing gender identity protections and replacing them with a narrow biological definition of sex. Here's the context. The Fair Housing Act as written does not explicitly protect against discrimination based on sexual orientation or gender identity. Only 22 states and District of Columbia have those protections at the state level. For LGBTQ+ buyers in the other 28 states, the federal backstop is disappearing. And research consistently shows that same-sex couples already experience significant discrimination when trying to access housing. This makes that worse. Single women are already 30% more likely to be denied a mortgage than single men applying for the same loan. This is despite the fact that women statistically default on mortgages at lower rates than men. The systems designed to predict repayment aren't accurately capturing women's ability to pay, and yet the denial rate persists. The laws designed to close that gap, the Fair Housing Act, the Equal Credit Opportunity Act, only work when someone is actively enforcing them. With HUD lawyers being forced out, complaint investigations slowing, and the CFPB stripped of its enforcement authority over indirect discrimination, that muscle is gone. The law exists on paper, the accountability behind it is eroding. Veterans are being left to navigate this alone. The VA loan benefit is one of the most powerful homeownership tools in America. No down payment, no private mortgage insurance, competitive rates, built as a promise to the people who serve this country. But the agents that help veterans navigate that benefit, understand their options, and resolve disputes when something goes wrong, HUD, the CFPB, are both operating with significantly reduced staff and capacity. The benefit exists, the infrastructure around it is being stripped. And veterans, particularly veterans of color, are left trying to access a complex system with fewer people in their corner. And the one nobody's talking about? They're eliminating the data that proves discrimination exists. For decades, lenders have been required under the Home Mortgage Disclosure Act, HMDA, to report every loan application by race, income, gender, and geography. That data is what exposed redlining. It's what proved that minority buyers were being steered into predatory loans before the 2008 crash. It is the foundational evidence base for every fair lending enforcement action in modern history. The current administration has been systematically reducing the collection and publication of demographic data across federal programs. The CFPB, the agency responsible for HMDA enforcement, has been operationally hollowed out. Fewer staff, reduced oversight, slower reporting. Here's what that means in plain language. If we stop measuring discrimination, we lose the ability to prove it exists. If we can't prove it exists, we can't fight it. And if we can't fight it, it just becomes the water we swim in. That's not regulatory reform, that's erasure. Now here's the question nobody asks until it's too late. If a bank discriminates against you, denies you, steers you into a worse product, encourages you from even applying, who do you call? For most of the past 15 years, the answer was the CFPB, the Consumer Financial Protection Bureau. The agency created specifically to be a check on big banks and protect everyday borrowers. Since 2010, it has issued enforcement actions that return billions of dollars to consumers. It fielded over 1.6 million complaints in a single year. That agency has been systematically dismantled. Workforce cuts, halted enforcement actions, funding reductions. And the rule change that matters the most to you as a buyer, the CFPB is no longer using disparate impact in its supervision or enforcement of fair lending laws. Every open investigation that relied on that standard has been closed. Starting July 21st, 2026, even something like a lender choosing to advertise only in affluent neighbors while ignoring low-income communities, a textbook redlining tactic, no longer qualifies as prohibited discouragement under federal law. That's not a technicality, that's the playbook that locked people out of homeownership for decades. even generations. Now largely legal again at the federal level. But here's what I need you to know. You are not without options. They're just different options than there were 2 years ago. First, CDFIs, Community Development Financial Institutions. These are mission-driven lenders built specifically to serve communities that big banks have historically ignored. Credit unions, community banks, nonprofit lenders. There are roughly 1,500 of them across the country, and they are in this market. They operate with a fundamentally different mission than a big bank. Your success is their metric, not just their risk model. Congress has continued to fund CDFIs at over $300 million annually, largely rejecting the administration's attempts still flowing. The CFDIs are still operating. If a big bank has turned you down or treated you unfairly, this is your next call. I can point you directly to the right ones in DC, Maryland, and Virginia. Second, state-level protections are still standing. Right here in our market, DC has some of the strongest fair housing protections in the country, already codified at the local level, independent of federal policy. Maryland has robust state-level fair housing enforcement and actively funded down payment assistance programs through the Maryland Mortgage Program. Virginia has similar programs in place. And the Federal Home Loan Bank Grant, available across DC, Maryland, and Virginia, can provide up to $20,000 toward your down payment and closing costs. It can be layered with other local programs. That's real money available right now. Third, the legal fight isn't over. Fair housing organizations have already filed suit challenging the CFPB's new rule gutting disparate impact protections. State attorney generals are expected to follow. The courts are the last backstop, and advocates are using them. You can still file complaints directly with HUD under the Fair Housing Act, which operates independently of the CFPB rule change. That avenue remains open. So here's the practical playbook. Don't go to a big bank first. Go to a CDFI, a community lender, or a credit union. Institutions whose mission is your success, not just their margin. Ask about state programs before federal ones. In this market, the Maryland Mortgage Program, Virginia Housing, and DC's Local Assistance Program are better capitalized and more reliably accessible than anything depending on federal goodwill right now. Get a HUD-certified housing counselor in your corner before you start the process, not after something goes wrong. They're free, they know the programs, and they know how to document problems if discrimination occurs. And if something does go wrong, a denial that doesn't add up, a product you were steered into, a lender who made you feel unwelcome, file a complaint with HUD, with your state's Human Rights Commission, with a fair housing organization. The federal cop may have changed the rules. The state and local cops haven't. Here's the bottom line. 8 separate policy changes, all affecting the same communities, all moving in the same direction. My job isn't to tell you what to make of that politically. My job is to make sure you're not caught off guard by any of it. The Fair Housing Act was passed in 1968. It took 57 years to build what we had. It is being undone faster than most people can track. But the window isn't closed, not here, not in this market, and not for you. I'm Troy Patterson. If you're trying to figure out what this means for your specific situation, that's exactly what I'm here for. Link to connect is in the description. Now you know. Use it.